Hello everyone, I'm back again and I will be teaching Malaysian SNR from the very scratch down to the very top where you should get clear understanding all this. So I've just to save time, I wrote out a very quick detailed breakdown of the path we're going to take in learning this whole thing. So we're going to start with the key levels, then move on to breakout structures, entries and exits, then finally on how to get your storyline and directional bias. Coming to our chat, you can only use any asset, all right? Please subscribe to the channel, uh, give a like button. Thank you very much. Okay, now you could always use any asset. I don't want to use gold this time around because sometimes people think Malaysian SNR is only for gold. Yeah, well, yeah, mostly people use gold with Malaysian SNR, or people use Malaysian SNR with gold mostly. But now I'm trying to use GBP USD for example. Okay, when you're dealing with Malaysian SNR, the first thing you want to deal with is your key levels. So there are three types of key levels. Okay, so let's check them out. The first one, which is gaps. All right, the gaps is very easy to identify. When you check out your charts, we see, can you see this joint in between these two candles? That's a gap level. You can see they're all over your charts. All right, they're all over your charts. So those are gap levels. All right. Then if you switch to the line chart, you see what it looks like. It appears to be out of nowhere, or it appears to be on nowhere. All right. Then we have the next kind of levels, which you call the support levels. Support levels are usually found beneath your candlestick. You always find your support levels beneath your candlestick. And for your candlestick, can you see this? When you see a sell and a buy candle together, for it to make sense, pick to your line chart as quick as possible. Can you see this V level? That's your supports. So you always find your supports beneath your line charts. All right. If there you can see, if I go back to the candlestick, you can see how that it's actually perfect to candle closed there. Then what about this place? You find your support there as well. Now, can you see that? So that's very quick. Then how about your resistance? Okay, you will find the resistance levels everywhere above in your candle formation. Okay, look at this level here. That's the resistance level. Just go over to your line chart to see what it looks like. Right. Then, okay, you have it there right away. So these are resistance levels. All right. Then the next thing I want to look at these extra tips for finding key levels. Now, these extra tips for finding key levels, which I want to tell you, is not something you will really find in Malaysian SNR. I'm just kind of okay, just watch. Now, I usually use my Fibonacci whenever I see a long week like this, a very long week. This long week I usually found on the daily, on the weekly, and on the monthly, sometimes like this. So, for example, now on the daily, when I see a long week like that, what I usually do is this. Sometimes I will just use my Fibonacci to and get 50% of that range of the week. When I do that, okay, why is this giving to because so when I do that, you put a line over here at and that line serves as your what's your level. It serves as a key level as well. And you can see how price reacted from it just after number of days. Then another thing you need to know is that at the top of this week, all right, or at the top of every candle week you're seeing, like this one and the lower part, this one and the upper parts. The top of this candle also, the top of these weeks, they also have key levels. And I'm going to explain something. Let's watch. Let's watch. If you go down to the 4 hour time frame, what does it look like? Can you see that you have exactly what a resistance just beneath that level? Can you see? But on a daily time frame, it would have just look like a single candle with a wick. However, when you go down to your 4 hour time frame, you see that it's actually a resistance level. It two bodied, it two formed a double count like two, a double candle. Okay, let me give you an example. Put this here. Put down to your 4 hour time frame. What do you see there? You can see that you have your two full body candles, the resistance as well. Having known that, you can also check out for something like this as well when you see a candle wick. So yes, okay. Then what do you see here in 4 hour time frame? You can see that if I find two bodies, if you go down a bit again to 1 hour time frame, you find that there's also a level there. Can you see that two candles over there? These are things you should pay attention to. All right. Then going to the next thing in our list here, we have um we have right. Give me a minute, please. Okay, so we have on our list, what next do we have? We have breakouts, okay? Breakouts and breakout structures. The first thing we have here is a candle break. What does a candle break look like? For a candle break, what we usually find out is this in a candle break. This is what I want you to understand concerning a candle break. Concerning a candle break. Now, pay close attention, please. Now, this candle currently is still forming, so I will not really regard it because it's still forming. So I can't take any action on this daily time frame. I can't take action with this in mind fully, like not completely. I'll regard these other ones down. This is still forming. It could still go up into a bullish formation. So to make my judgment on this candle is really quite might be risky. Understand? So I'll regard the ones backwards. Now, if I should zoom a bit closer, do you see that okay? Imagine that this candle has finished forming. This present day candle. Let's imagine that the formation is completed already. Do you see that the candle broke beneath the level that is here? The level, that key level at the bottom of the wick of this candle, you can see that this black cell candle has broken beneath it. Assuming this candle has ended its formation, you can call that a what? A break. All right. You can call that a candle break. But this candle has not ended its formation, so I will not call it a candle break yet until this day is over. But to give you a more precise example, let's check for other examples in time past. Okay. Now, can you see this? Let's look at this one. Look at this black candle I'm pointing towards. You can see that this buy candle, this British candle, broke above. It broke and it closed above what? The tip of this candle's wick. So this is a candle break. All right. Let me give you another example. You can this is a candle break as well. can see that this candle closed above the resistance level from this candle wick. So this is also a break. These are candle breaks. What about for a let's say a bearish descent? We'll find, let me give you a good example. Oh, very good. Now look at this one, two, three candles I just pointed out. You can see that the tip of the wick beneath this bullish candle, you can see how this sell candle closed beneath it. At this point, there has been a break as well to the downward side. These are candle breaks. All right. You will not really find this in Malaysian SNR. I'm just adding this. Okay. Now the rest, which is for Malaysian SNR, I don't know if I'm the one adding it or it's for Malaysian SNR, but just learn it. What we call the internal breaks and the external breaks. For the internal breaks, this might look a bit. Now for the internal breaks, let me show what an internal break looks like. Now let me look for another asset. Okay, I don't want to use one, but sometimes when we use one asset to create YouTube content, you feel like, oh, it's only for that asset. Let's check out another asset we have on our watch list here. All right. Now, an example of an internal break is this. Let me show you. Okay, to make it, I don't know how I should take it. If I should take it with external break or internal break. Okay, I'll point your attention to both of them at once. You'll get the whole full gist. Now, okay, I'm looking for a very good example of an internal and external break. You know when you have a market structure, for example, let me give you a very good, I don't know if this is a very perfect example, but let me take from this area here. Okay. Now, if you observe clearly line chart, you can see that this level where I just put that support level did not, you can see that price stopped at that level. It didn't come down to break beneath this level. Okay. If price had come down to break beneath this level, that would be like an external break. But this is an internal environment. How best can I put this? I want you to understand this perfectly. Now, did you see this? Did you see this break here? This, you can see how price came beneath this little support level here. This is an internal break because it's within this range from this low here to this high here. An external break would have been that price came and broke beneath this level downwards. Can I see an example of an external break? Now, this would be a very good example of an external break. Now, uh, see what price is here. Can you see how price came down and broke beneath this level? Normally, price should have probably come down a bit. Now, seeing price close beneath this level, okay, this is an internal break. This purple box where I'm drawing my my stuff right now, that's an internal break because it's still within this range, the range of this low where my mouse is pointed to, and the range of this high where my mouse is pointed to. So an external break will be that you can see how price came beneath this level and broke that level. That's an external break. But the one inside here is an internal break. Another example again to show you perfectly what we're talking about here. How about a bearish descent? A bearish descent. Bearish descent. Okay, I'm trying to conserve time, right? Can't find a perfect example right now. But over time, as we go into more of this Malaysian SNR, you get to understand all this better. Now, the next thing now is what we call the entries and the exits. For the entries and the exits, okay, when you want to enter your Malaysian SNR, like when you want to make entries in your Malaysian SNR, what we usually find out is that we actually work with two time frames. Let me switch to another asset now. I'm doing this so you can see how that this thing is something you can do across all peers. Okay, what next should I take here? Okay, so what am I taking? I don't know. Let's try something called stocks. Why am I playing around with this? Why am I playing around with this? Let's pick something. Okay, and why is it not coming up? Okay, I guess I'll take something else entirely. Okay, let's try this S&P 500, for example. Now, sometimes you can see that these candles are not properly stacked. That's why it's really good if you use a line chart. So if I was to put my line here for support, you see how that in the candle chart, you see how it looks like. So this things might want to bring a little of confusion, but your line chart will just simplify everything. So how do we take our breaks? Sorry, I say our entries. How do we take our entries and our exits? Now, when you're dealing with Malaysian SNR, this is what you do. You want to actually you want to work within two time frames. So let's say if I was taking my daily time frame as my major time frame, then my forward time frame will be my um lower time frame for entries. Okay. Then why am I having all this blue stuff? Okay. Now, if I was taking the weekly time frame, all right, my daily time frame would be my time frame for entry. If I was taking the monthly time frame, my weekly time frame will be my time frame for entry. If I was taking the forward time frame, my 1 hour time frame can be my frame for entry. That's how this Malaysian scenario works. Let me use a smoother chart. I don't like the way that S&P is giving me scattered candles. This might not be the perfect environment to teach you this Malaysian right now. I don't know why my energy is quite funny this evening, but I just want to teach you these things. All right, that was I think AZ. Let's check AZ. USD something. All right, let's try this. Let's see what we've got here. Now, let's say I want to use my daily time frame as my mode of entry. Sorry, let's say I want to use my daily time frame as my major time frame and my forward time frame as my entry. Now, what I would do is this. For the Malaysian scenario, what you are expected to do is this, okay? Let's take let's do a replay. Bam. All right. So now on the Malaysian scenario, power time frame. Oh God, it's too far. It's too far. All right, it's too far. What's the nearest one? Let's check the nearest one we are allowed to take. Okay. Can we go down that far? We can't go down that far. We can't go down that far. However, I have to do it off without replay. Now, when you want to take your entries, we usually pick your key level from the higher time frame. This one level here. This another level here. And like I told you, um, in the previous video on the channel, you will find a video where I spoke about fresh level and unfresh level. Now, I didn't talk about fresh level and I didn't talk about unfresh level. I don't know how I skipped it. I should have written it here, somewhere here. I should have written it here. Okay. Fresh levels and unfresh levels. Right. So we learn to get the hang of this thing over time. Right? Here's one level here. And this another. So mind you, some of these levels are no longer fresh again because of how price has wicked through some of them. There's a video I have where I spoke about fresh and unfresh levels. But to make things much easier for you, let me look for a monitor environment. I'm talking about entries now, okay? Now, this is very good. Look at this environment. Let your eyes be there, okay? Now, in this place here, this point where price taps it the first time, that key level was no longer fresh any longer. It tapped it again. It made use of it again. It's not bad. But many times, once they tap it the first time, our level of priority on that level might drop because we work with levels that are still very fresh. Okay, so just know how to do this yourself. Now, if you go down the forward time frame, what do you want to go for? We want to go for a breakout on that time frame. So we are looking at the first instance where we had that touch. That is this point. So we're looking at entries now, okay? You can put a line there. You can put a line there. Now we go down to our forward time frame, right? Now on our forward time frame, we want to look for a breakout. And that breakout is usually an external breakout, not an internal breakout. You put your line chart and you ask yourself, what was the last resistance level that was formed before this line? Because if you go by the daily time frame, you will realize that okay, back to the candlestick, please. On a daily time frame, you realize this. You realize how that this guy had a rejection on this key level. That's why you're going down to your 4 time frame to look for what? A breakout. This level, this level, now that it was touched here, you ask yourself, okay, that was the second one. I mean, I'm talking about this first one right now. This level, was it where we had a touch? No. We can adjust it a bit. The first touch happened here. Can you see that? Then you ask yourself, before this touch, what was the last resistance level that was formed? This is it over here. Put in your line charts. Can you see it? Then you want to draw a line. All right. So imagine that price has not formed yet. I mean, to this level. What you want to do is that you want to see price break above this level. Until price break above that level, it is not yet what? It is not yet time to enter an entry, or it's not yet the proper time to make that perfect entry. The moment we see price, this candle wick only pierced through the level, but the candle didn't close above the level. So you can't call it an external breakout. But moving a bit, we see how our price finally came. And with a bullish candle, it's what closed above that key level. At that moment, there has been what an external breakout. And then you can take what your trades. So this is how you place your entry. Now I'm not giving you much detail, but I'm trying to let you know how we take the entry. And how do you take your exit? Or in the day time frame as well. On the daily time frame, we look for what? A day level. Because we're operating, or rather, because we're taking our major decision on the daily time frame. Okay. We went down to the 4 hour time frame to make our entry. Then to take our exits, we have to go back again to day time frame to look for a level where we can go back down to the 4 hour time frame again to look for an exit. Let me explain. This day time frame here, we took a level here, we reacted off it. Now we are going to exit our trade also on the daily level as well. Now you can see where this guy reacted from. Was there any level there? Let's check towards our left. Okay, let's check. Can you see? Fantastic. Can you see this? Can you see this level? On your line chart, you can see it's a resistance level. Now, the moment we see price approaching this level, we want to draw a box there. Okay. We go down again to the 4 hours again. And we want to look for what? A breakout. Now, if you observe, did you see that on this level here, this was an external breakout. This was an external breakout. At this point in time here, this was an external breakout. This guy here is an internal, is still an internal structure because this guy, this V you see here is still an internal structure. The last V down here is an external one. Okay, like it's an external level. I don't know how best to use the perfect word for you, but I feel like you're getting this already. But the truth is that if you wanted to have wait for it to come down and give an external breakout, you must have lost some good money, right? So what if we went down a bit to, let's say, a 1 hour time frame? On the 1 hour time frame, we could still spot that breakout structure that will signal an exit right on time. And let's see if it gave us. Can you see? So at this moment now, can you see right now how that this level was broken? When we see this break or structure breaking below this level here, okay, then we begin to get the hint that we might likely close this trade. And you can see how that it came down all the way to break this one. Maybe you might still be at this, this area here, and you're wondering, okay, maybe it might come back a bit. But you waited and you found that it came down and broke beneath this level here. That's a very that's a, a red flag to exit this trade early on. All right. So I will stop here. Then the next set of videos, I will still recap this breakout structure. Okay, rather, I will recap this entry and exits. Okay, I'll recap it. Thanks very much. Subscribe to the channel. Yeah, let me show you the video. So this is the video where I explained fresh and unfresh levels. This one in particular. I need to watch it. Okay, this is over here. All right. Okay, so yeah.